I'm Matt Bishar with REIT.com here at Georgetown University for the Real Estate Luminaries event. Joining me is one of the event participants, Sonny Kalsi, founder and partner of GreenOak Capital. Sonny, thanks so much for joining us.
Thanks, Matt. Happy to be here.
Now, compared with your company's holdings in the United States and Japan, your European portfolio remains relatively small. Is this a case where you're not seeing many attractive buying opportunities in the market?
You know, it's less that, and it's more kind of when we started investing. We started investing 4 years ago, and at the time we thought the U.S. and Japan were at the bottom of the cycle and they were cheap, and we were still chicken about Europe, you know, so we went very slowly with Europe, and it wasn't really till Draghi came out and kind of put a floor under the region in kind of early 2012, late 2011 that we got more active. So we got a later start.
Now, are the opportunities there, do they seem to be improving?
You know, there's a fair amount there, but it's a little bit like the U.S. was in 2009. You know, I think we thought there was going to be a tidal wave of assets, and it just hasn't happened yet. I think there are a lot of reasons for that, all the quantitative easing that's happened, and you know, look, that combined, there's a lot of money there. There's a lot of capital that has showed up in Europe. You know, just about everybody I know. I spent a lot of time in Asia on the distressed business, and everyone I knew 15 years ago in the distressed business in Asia now lives in Europe.
And how would you describe the access to capital for private equity real estate investors in this current environment?
Yeah, it's getting better. I mean, you know, I think if I were to put things on an index, if 2007 was 110 on a scale of 100, and 2009 was a 10, it's probably a 50 or 60. It's somewhere in the middle. It's gotten better. I mean, obviously, if you're a powerhouse like Blackstone, you can, you know, raise money very well because you have a great track record. I think for younger firms, it's still hard.
Now, your company's portfolio contains a mix of property types. How do you successfully juggle managing these types of assets?
Yeah, so it's different by region. So like in Japan, where we invest there, we only do office buildings in central Tokyo. And so that's pretty easy. It's very straightforward. We do that all in-house. The U.S. is tougher. We invest in 5 different cities, different asset classes. So we actually work with a lot of local partners in these different markets. So we're not really doing the day-to-day management ourselves. We're making the investment decision. We're making the strategic decisions on what to do. We're making the sale decisions for sure. But someone else is doing the day-to-day management.
So that having that local partner is really key.
Yeah, for us, it's really key. You know, I think some people do try to do what I'll call the vertically integrated approach in a lot of markets. And look, I'm a big believer that real estate's a very local business, and I think you could be the best. You know, retail's probably an exception, hotels are an exception, but I think if you're an office, if you can be a dominant office landlord in New York City, that doesn't mean you know anything about LA.
Sonny, thanks so much for joining us.
Thank you.
For more on this and other real estate news and analysis, be sure to visit REIT.com.